what tips do you have for someone who may be struggling to pay back those loans once they start back later this summer?
So for federal student loan borrowers, the very first thing you want to do is track down your loans, figure out what servicer is handling your loan. You can do that by logging into your Department of Education account at studentaid.gov, which will tell you who your servicer is. A lot of servicers have changed in the last couple of years, so who you had as a servicer a few years ago may not be the servicer that you currently have. You want to evaluate your payment plan. When payments resume, they're going to revert back to whatever the payments were prior to COVID going into effect, that COVID pause, unless you've applied for a different plan in the interim. So contact your loan servicer and figure out what plan you're in and what your monthly payment is going to be. If it's too high, if your circumstances have changed, you might want to consider changing to a different plan. There's a number of income-driven repayment plans that can provide more affordable options in some cases than a normal standard or extended plan, and that would be a good thing to look into. For private student loan borrowers who have high variable rate loans, options are a lot more limited. Those folks, your only real recourse is to explore refinancing the loan through a different lender to try to get a better, ideally fixed interest rate.
So, would you ever suggest to a young borrower to pause their 401k to help pay off their student loans?
You know, that's generally not often going to be a good idea. We want you to be able to retire. One of the problems with the student debt crisis is that people are not saving or investing enough for retirement because they can't because of their student loan debt burden. If there's any good news, it's that some recent changes to the law may allow some employers to match retirement contributions to a borrower's student loan payments. It's not mandated, but it's a new employer benefit that some employers may be able to offer. So in other words, if you contribute a certain amount to your student loans, your employer may be able to match that as contributions to your retirement accounts. You can kind of accomplish two things at once.
Okay, that sounds like a small paycheck, but I am curious how does one actually pay off debt and save money at the same time? Because doesn't that keep putting you right back where you started at zero? And even if you're saving, you still feel like I have this debt looming over me. Wouldn't you think it'd make more sense to just get rid of it in, I don't know, 5 years and have it off your back than to keep trying to pay your retirement and deal with these student loans?
Every situation is unique, and it really comes down to the type of loans you have, your income, and what you can afford to pay. One of the features of the federal student loan system is these income-driven repayment plan options where you're only required to pay a portion of your income, regardless of the size of your balance. And those income-driven repayment plans have a finite repayment term. And if you haven't paid off your loans in full by the time you reach the end of that term, you can actually get any remaining balance forgiven. So there is potentially a way for folks to be able to pay what should be an affordable payment amount while also trying to work towards other financial goals like saving and retirement, with the understanding that you may ultimately be able to get your loans forgiven. There's other programs as well, such as public service loan forgiveness for folks who typically have lower incomes because they work for government or for nonprofit organizations. You might be able to get your loans forgiven in as little as 10 years if you qualify for that program and you're paying based on your income. So that can also be a huge benefit for people who are struggling.
Okay. And just in case any of you are thinking about trying this, Adam, what happens to someone if they just say, forget this, I'm not paying it, I'm not paying my student loans?
Well, that can lead to what we call default, which is a breach of the underlying loan agreement, and that can have very serious consequences. If you default on federal student loans, historically, the government has been able to pursue borrowers without necessarily needing to go through the court system. They have what we call administrative powers that can allow the government to intercept federal tax refunds, garnish wages, and even offset Social Security benefits in certain cases without having to step foot in a court. Private lenders are different. They don't have the same powers as the federal government does, but private lenders can also sue folks in court and try to get a judgment against them, which, depending on a state's laws, can allow them to go after income and assets that way. So default is pretty serious. That being said, the bulk of loans out there are federal. And if you are in default in federal student loans, there's a lot of programs out there that might allow you to bring the loan out of default, restore it back to good standing, and then you can access all these programs that could be beneficial, including income-driven repayment, public service loan forgiveness, and ultimately potentially loan forgiveness.
Okay. Well, thank you so much for joining me today.